Welcome to Ready Set Real Estate, where we will help empower and educate you on many different aspects of real estate, finance, and investing. Each week, we will expand your knowledge and uncover hidden truths. We will break down real-world scenarios and study actual how-to strategies. Anyone can buy real estate, but together we'll ensure you make smart real estate investment decisions. Now, here's your host, award-winning author, international speaker, and real estate educator, Lisa Gillette.
I almost want to say thank you. Thank you for that announcement. That's so wonderful. Welcome, welcome, welcome. Happy Wednesday. I am feeling really joyous today. Shout out to my brother Evan, ERGJ, who we also stream from the ERGJ page. We were just having this conversation last night about joy, and I just had me reflecting about all the good things in life, all the things that are aligning. It's always great when you feel aligned in your purpose on purpose. All right, so we've got a great show topic today. We are going to be talking about chaos in insurance because, yes, I am getting those phone calls. Yes, I'm reading some of those new headlines. This may not affect all the states. This is a California thing. It appears to be so far a California thing. And I think any states actually that have been hit by wildfires and floods. California is an earthquake state as well, so I'm sure that has something to do with it. All right, so before I jump into ranting a little bit more, I just want to make sure I do sound check because, of course, I was playing with my mic and doing different things. Press 1 lets me know you hear. Press 2 lets me know you shared it. So drop a 1 in the chat below. Let me know you hear, and of course, 2, you shared it. For those of you who are streaming on our YouTube channel, thank you, thank you, thank you. For those of you who are joining us from our Nextdoor community, welcome. It's always great when I can connect really with the Nextdoor community because those are literally our neighbors. Those are people that are in the area that I've walked, I've served, I've worked, I've sold, I've leased, we bought. And so it's always great to have those from Nextdoor. Of course, shout out to those of you who are streaming and listening on the replay of our radio podcasts, doing tremendous things and helping us grow tremendously. So thank you, thank you, thank you for that. Okay, so what am I looking for here? So episode 213, and of course I said I wanted to do sound check and turn off my phones, put it on silent so that you don't hear my phone ring in the meantime. Okay, so let's do this. Make sure we are good. Okay, good. Make sure we're good. All right, woosah. For those of you who have any of the Ready Set Real Estate gear, I want to thank you because we have yesterday, we've just approached our 5-year mark of declaration. So if you own IP is intellectual property. If you own patents and trademarks, you have to declare whether you are using your trademark continuously in commerce, or you have to file a declaration of non-use. And so we hit that 5-year mark already. I did not realize we had filed for the Ready Set Real Estate trademark 5 years ago. And at the same time, I did register the super agent trademark. So we are in our declaration of continuous use. And woohoo, I just filed those yesterday. So that, in fact, I did something, I took it to the next level. So there's a certain category that you can file as a combination, which will allow you to file not just a declaration of continuous use, but a declaration of incontestability, meaning that I hold it on a principal register and I have been the sole use and owner of it. And it kind of limits the ability for someone to challenge the use of my trademark or wanting to use a trademark. So I encourage you, for those of you who are IP owners, make sure you're following up on the maintenance of those IPs so that you can protect the licensing opportunities that will come in the future with those intellectual property. So I say that to say that I'm ready. I'm wearing one of the Ready Set Real Estate shirts. We did the I forget what it's oh my gosh, I forget what it's called. But I had one client, she's from Nigeria, and she said to me, she said, "No, I want that shirt. I want that one." And I said, "Okay." So we swapped out her shirt, and she probably wore her Ready Set Real Estate shirt when she closed escrow, and she just was like posing. And so it's always awesome to see people just want to represent and support in terms of what I've been doing. Of course, I'm wearing the visor. So this is the Ready Set Real Estate visor, curls all over the place. This is my this is acting as a bandana for my hair because as you see, I am growing this out, but this is the Ready Set Real Estate visor. So summer is here. Make sure you get your gear. Where do you get the gear from? Very easily. I'm glad you asked. Where do I get the gear from? Of course. So, the best and easiest place to do this, and I'm going to share my screen while I talk over it. Best and easiest place to do this is go to laSuperAgent.com. In fact, there's just all the goodies are there on that website. I just keep that domain so that when people say, hey, where do I buy your book? Where do I sign up for your class? Where do I sign up for a consultation? Where do what do you have coming? What are you doing? Just go to laSuperAgent.com, laSuperAgent.com. It'll bring you up to this page. In fact, I'm actually going to be hosting a class on how to redesign website, agent bios, a podcast, a landing page, a splash page, an event page, uh, an event page. So I'm actually going to be using this site as one of my mock sites. So I'm going to use this and show entrepreneurs, real estate professionals, those who are interested in learning how to revamp a website in 4 simple steps. 4 simple steps. And using AI for the content or the copyright. So LASuperAgent.com. These are the classes and whatnot. But more importantly, when you keep scrolling down, it says right here, right? Official Ready Set Real Estate merchandise. There's a link right there. Here's for the custom hats, merchandise. So make sure you visit LASuperAgent.com. Brother Dean is in the building. I was thinking about you day before yesterday. So I am so happy. I think because you shared something. And so I'm so happy to see you on. I was thinking about my Philly folks. I think also because I was watching the news what about the I-90 or 95 freeway collapsing. I was watching, they were talking about rebuilding the freeway. So, ooh, kind of scary. That probably might tie into this topic today. So, Brother Dean says, greetings, Ready Set Real Estate, the real trendsetter. I appreciate that. I receive it. Yes. So, wanted to share with you that we are in that renewal. You all have made that possible in growing our brand, growing the Ready Set Real Estate brand. So, and that's what it is. If you are, and let me say this because I think what I'm going to do is I'm actually going to add that as a link here. If you're interested in sponsoring an episode, if you have something that could, cater to our audience, our listening audience, whereby it's inspections, it's a book, it's a training, it's a course, it's something that can connect and add value to our community. I encourage you to connect with me so that you too can sponsor an episode. All right, you too can get some of this love at Ready Set Real Estate. Okay, so let me put my slide back. Today, thank you, Brother Dean is like, I'm here getting this free education, cost of admission. Let's talk about it. Is one, letting me know you're here, and two, letting me know that you shared it. Sharing is caring. All right, let's do announcements. So, announcements, I certainly want to talk about those second quarter goals. Gosh, I've got momentum and I know I feel great about it. So, I trust that momentum is picking up for you. Happy summer solstice, by the way. Oh my goodness, that's probably why the momentum is shifting. We're shifting away from the May gray, June gloom. And I woke up in this. I'm ready. I'm ready. So we'll finish out the show. I'm going to work out and then likely hit the pool later and just keep that momentum. I finished my case briefs yesterday, 7 days ahead of schedule. I think this year was close to 52 cases. So I know. It's just it's a tediousness in the process of learning the law. However, I've been enjoying reading the opinions of the judges, both the majority opinion and the minority opinion. And it's really interesting to see how over the years and decades, depending on the era, depending on the time, depending on this, who are the supreme justices, just kind of how the laws change over time, right? Case law is what we're referring to, or what I'm referring to. All right. Those are announcements. So those are my announcements and goals. We've got new listings coming. In fact, we renewed one of our vacant lot listings. I shared with you that Kyle, my husband, has joined as our one of our newest agents. Really excited for him. What else is happening? Real estate classes. So let's talk about that. So real estate life events, real estate life events. I know, and Evan's gotten on my case about this, and he's like, "Are you going to make that available for people who can't be in California?" Like, people want to know, people want to learn from Super Agent, and he's so right. So yes, I'll be a lot better. I'll be a lot better at recording our events, our live events. This one's coming up on Saturday. How to undo a reverse mortgage, avoid foreclosure upon death of a senior borrower. A lot of our folks are not really prepared when their loved one passes away and understand that just because they took out a reverse mortgage doesn't mean the house now belongs to the bank. That is such a misconception. And we are really aiming to change that mindset, that is not the case. The bank does not tell you that. That's not what they say. They don't even say that in the disclosure. It's no different from when you buy a home and you use the property as collateral for repayment of that mortgage. It's no different from the same paperwork that says in the event this property is sold, in the event that you pass away, in the event of all these other factors that trigger the loan to be called due, we want to get paid. So we're going to talk about how do we undo this reverse mortgage? How do we avoid foreclosure? What is a successor in interest? What do they need? How does that tie into probate? Can you get a trust to avoid the probate, that whole thing. So a lot of questions, a lot of great discussions will come out of this. And I imagine we will continue this series on reverse mortgages, probates, and trust sales as we continue, because this is where we are. Our grandparents, our parents are in that window between 60 and 80s. In fact, my oldest client passed away at 93, who had a reverse mortgage. And so the family's dealing with the dynamic in terms of, qualifying to purchase the property, which essentially is paying off the loan. Okay, so real estate life events, make sure you hit that register link. It is free to attend for community and local residents. For my real estate professionals and community, my real estate folks, there is a charge to attend. You're more than welcome to attend, but there is a fee. I do dedicate our community events to our community, so they don't feel solicited, inundated, and pressured to be in a room full of real estate professionals who are probably trying to solicit them to sell, buy, or do something, refi. Right? No, I don't. I don't want to put people in that space or in that environment. They should just be able to come, learn, get this knowledge, and feel empowered that they can share that information with their tribe, with their family and friends. So that's why I do it that way. If you want to attend, there's a fee. And as a real estate professional, whenever you pay for any of the Ready Set Real Estate events, know that those events go towards our real estate youth Boot camps. Yes, our real estate youth boot camps. That goes towards our real estate youth boot camps, which are still happening. We're still happening. We're still having those. I'm lining that up as well. July, August were the tentative dates. So there'll be more information coming about that. Okay, cool. All right. I think I'm ready. I'm ready. I'm ready. So we'll be right back after this sponsor break. I will definitely jump in and remind you of all disclaimers on talking about this topic, but we'll be right back after the sponsor break.
We know how challenging it can be to try and sell a home while also dealing with other financial and legal matters. We're here to help. Devenio Estates is the real estate firm you need to make sure your unique situation is handled as quickly and efficiently as possible. Our team of professionals has a combined experience of over 30 years in real estate, construction, and finance industries. As active professionals in the industry, we know the importance of timelines and pride ourselves in providing superior service without compromising integrity. We use industry software and copyrighted proposals so that our real estate agents submit accurate and complete listing information and buyer offers. Our goal is to exceed your expectations and set Devenio Estates as the go-to real estate firm for excellence in advocacy and superior services for our clients. Contact us today to learn more about our services.
That, of course, is a shameless plug from yours truly. It's funny when I click the buttons, I've got a whole bunch of list of commercials and whatnot, and I go and I click one, and so it's kind of cool when when I do click one. It's our very own brokerage. So Devenio Estates, for those of you who are new to Ready Set Real Estate, Devenio Estates is actually our brokerage. So independent firm based in Southern California, where we specialize and we have specialized knowledge in probate sales, trust sales, foreclosures, and short sales. Those are usually challenging transactions that have a lot of moving parts, that require a lot of compliance with the California Probate Code, have a lot of compliance with the new law set forth on how banks are to comply with short sales. There are new laws that have gone into effect this year, how banks are to comply with foreclosures. So that requires specialized knowledge, which we pride ourselves in the continuing education and learning on how to properly and successfully close those transactions. All right, that's my spiel. Okay. Disclaimer, of course, I've got to share a disclaimer. The information provided on this show should not be considered legal or tax advice. Please seek legal and tax advice from those reputable licensed professionals regarding your unique situation and or scenarios. Please reach out to those reputable licensed professionals. Got it? Good. Brother Dean says, congratulations. That's awesome news. Absolutely. It's almost right. It's a natural progression to launch our own brokerage and company. And so, yes, Devenio Estates is our very own. It's our very own baby boutique firm here, growing after many years of learning. And in fact, we launched during COVID. So if anyone is thinking about growing and doing something bigger, I encourage you. We just went ahead and we went for it. And what a time to start a company in the middle of a pandemic. And I will say that through grace and faith, that's been a testimony of how I've been operating in my life, that we are still here through that. And in fact, we broke records and we are doing well, and clients continue to refer and trust what we do. That's key. That's paramount. And it's ultimately, thinking about the bigger picture. We want to be here and represent something for the community that has representation. This is someone who's, not this big franchise of a monster, but this is someone who lives, works, and plays and is truly here for our community. Just ask Google. Look at our track record, right? All right, so homeowners insurance chaos. Now, I did share that this so far looks like a California thing. This looks like a California discussion, and it could trickle on to neighboring states, more states, especially those of you who are experiencing some of those natural disasters, such as floods. I know Texas, when they had that flood a couple years ago, I almost think it's like, has it been 5 years? I feel like it's been 5 years. Maybe 4 to 5 years ago, they had that flood, and people didn't have flood insurance. Those are things that weren't offered. Here, we're in the summer. It is summer solstice, and California has been prone to wildfires. In fact, we're going to talk about a little bit about the data. But the reason that I wanted to talk about the homeowners insurance is because we don't know yet. So we're very early in this conversation. But again, like Brother Dean said, we're trend setting, right? And we'll trailblaze these conversations because we'll put you on the forefront of what you need to be thinking about as you are dealing with either jumping into the market as a first-time home buyer, or if you're an existing homeowner. So these are the things that I want you to pay attention to. Has your homeowner's insurance gone up? Or more importantly, has your homeowner's insurance been canceled? Have you received a notice from the insurer of non-renewal? Are they deciding to no longer renew? And so what I'm hearing, this is what I'm seeing and what I'm hearing, with those insurance premiums going up, it is affecting our first-time home buyers in their ability to qualify for those home loans. So let me bring it this way. I want to kind of do a focal point here. When you purchase a property with a loan, because the data said that 30% of properties bought nationwide were bought cash by investors. So you're talking about 1/3 of the properties in the country purchased by investors. If you're in a state like California, it does not require homeowners insurance. It does not require homeowners insurance. However, if you are financing a property, meaning you are taking out a loan to assist in purchasing that property, for example, FHA insured loans, right? FHA insured loans, conventional loans, VA loans, USDA loans. If you are using one of those loans, you are required to have homeowners insurance. That is to protect the lender's interests because they are financing, giving you a loan and using the house as what? Collateral. So they're protecting their investment. But what we have noticed right now that the California Insurance Commissioner has been cracking down. He's been laying down some new rules, and it has made our insurance partners and carriers a little uneasy. Uneasy is a very nice word. And what do I mean by that? Allstate and State Farm are pulling out of California. In fact, they have. They're no longer insuring new policies. They're no longer insuring new housing. So if you are an existing, listen up, because I'm going to share a story. Story time. If you are an existing policyholder of Allstate and State Farm, great. This is not to affect you. But guess what? And this comes, I was going to invite one of my insurance reps on the show, but I didn't want to subject them to disclosing behind the scenes information on a public platform. So I will relay that information, and I don't have to say who told me, but I know that they work for one of these companies. They probably worked for one of these companies. And I'm sure that even affects, oh my gosh, that affects their income. So we're just noticing there's a lot of feathers being ruffled in the insurance industry. So let me finish this thought about Allstate and State Farm. For those of you who have existing insurance policies, you are not going to be affected. However, this is what we are noticing on renewal, or it's similar to what banks do when a property is going into foreclosure, or has that first and second late payment. They do what is called a broker price opinion. They send a broker out, look at the property. Hey, is are the people still living in the property? Is it vacant? Is it occupied? Is it deterred? Is there deferred maintenance? Give us a comp analysis. Give us your estimate on repairs, and what is the after repair value. So similar to that in real estate and the banking industry, how they use uh, broker professionals in terms of navigating the foreclosure process. Similar to that, the insurance company is using insurance reps. So they send their reps out, likely someone from their underwriting team, or a third person. They send them out. And what are they doing? They're scoping out the property. Now, California has been really hot on this topic of ADUs. You with me? ADUs are accessory dwelling units. You know this because we're on episode 213, and on episode 212, we had guest Tim Campbell. Campbell talk about ADUs. Because part of the ADUs is the construction, right? It's a new construction or garage conversion. You're putting an additional housing unit or converting it into a housing unit on your lots. Now, when you have construction involved, people involved, people meaning tenants involved, you need certificate of occupancy, right? When you have that involved, you've got potential for injury, damage, fire, whether it flood, plumbing, electrical. You have potential for what we call insurance claims. So what is the insurance company doing right now? You guessed it. They're sending out reps to scope out those properties. Coming to take pictures, coming to check. Oh, look at that. I can see you converted your garage to a dwelling unit. We don't look, we don't have that on here. Right? Look here, we don't have, that's not on your policy. It doesn't show that you've got a binder coverage for insurance or construction. You're in the middle of an ADU conversion. Yeah. Or you made an addition. You put that owner's ensuite, right? That primary, you've extended the owner's suite, and you've added that beautiful bathroom, and you've knocked out the wall, and you've enclosed the patio, and now you've got this ensuite of an owner's bedroom. Doesn't show here that you got permits. Doesn't show here on the property record. So guess what happens? The insurance company says, we've noticed, true story. Client called me and said, I received a notice from the insurance company saying that they, and sent her pictures, sent her drone-like pictures. She says, I think they used a drone. Sent her drone-like pictures over her backyard and her driveway, saying, we notice you have excess trash and or debris in your yard or porch. You've got 30 days to clean it up, or we will not be renewing your insurance coverage. You got 30 days to clean it up, or else. What is the or else? We're going to cancel your coverage and good luck. She says to me, Lisa, can they do this? I've been with them for 20 years. How many of you know someone who's got stuff in their driveway, in their front yard, or it's all, you got cars on, you've got parked cars, You okay. You get where I'm going with this. You get where I'm going with this, okay? Because we're still going to build on this. And they sent her the notice. Now, unfortunately, her scenario has resulted in the cancellation of her insurance coverage, and the lender gets notified. See how this works? If you have a loan on your house, the insurance company cancels your coverage. They send notice to the mortgage company and say, we are canceling coverage effective June 20th, 2023 at 11:59 p.m. The lender then sends you a letter and says, you have X amount of time to get replacement coverage of your own choice. And if you don't get it within 10 days or 15 days, whatever timeline they stipulate, we're going to buy insurance and we're going to charge you for that insurance. And what they say is the insurance we buy is not going to cover all of your things. It's not going to cover vandalism. In fact, it's not going to cover a lot of things, and it's going to be more expensive. You're with me here? You see what's happening? Okay. You see what's happening? See, pay attention, folks. Let me go back to this. Let's go back to this. What am I saying here? I've talked in the last 4 weeks about things that are happening economically, cluing you in. This is not doomsday type. I don't like to do that. I just like to clue you in. Look at these moving parts. In fact, I'm going to be attending a webinar shortly after this show, so I'm not going to belabor this topic, about how the index is being changed from the LIBOR to the SOFR, I think is how it's termed. The LIBOR index, and basically the interest rates, how they're calculated and charged to the banking industry, is now using a different index. They like one that's more regulated for overnight rates and changes, because we've seen that, right? So it'll be interesting to see how this is going to affect the financial markets and contracts. So that's happening. You saw what happened with the banks and the Federal Reserve stepping in and saying we're going to protect people's deposits in the event we don't want, a financial meltdown. We're paying attention to these new rules around foreclosures and how they're handled. In fact, there's bills. Check for your state to see if there's any bills or laws, new ordinances that have been passed regarding foreclosure regulations. Why? Because that will tell you how your state is prepared to handle a foreclosure crisis. See, right now, California being one of the last states coming off of the moratorium, right? They paused foreclosing on people. They paused evicting people. California has held on, in fact, and they still have protections that go through next year, March. Goes to show. But in terms of foreclosures, they're rocking and rolling with that. They're filing notice of defaults. They're filing notice of trustee sales. So if you're an investor, if you're a first-time home buyer, if you run a nonprofit organization, you should be paying attention to, I think the episode I talked about the new rules regarding, how to buy foreclosure, because there's a new rule that says that you no longer have to compete with the investor. In fact, if the investor wins the foreclosure at the auction, there is a 30-day window that a first-time home buyer, owner occupant, nonprofit organization that deals in housing or purchasing housing, providing housing, transitional housing, you can come and match the investor's offer. Pay attention. All right. So now we have this happening here in the insurance industry, where they've been hard hit by wildfires. Wildfires here in California. We've got other states hard hit with the flood. Same thing with the insurance industry. When COVID happened, they had to refund insurance premiums on those who weren't driving vehicles, right? A good portion of us weren't driving our cars. In fact, I think it'd be the first time that I would witness, looking out my office window, I had the view of the freeway and it connects 3 freeways. There was no one on the freeway. And I said to myself, I don't think I'll ever see that again in my lifetime where there was no cars on the freeway. And so, because of that, the insurance companies had to refund a part of the insurer's auto premium. So, you had that happening in mass. And so, I'm going to read this data real quick, or just kind of, yeah, this data here from Quartz uh, online publication says wildfires have grown fivefold in Northern and Central California over the past 4 decades. So, in the past 40 years, we have seen an increase in wildfires, and that increase is requiring insurance companies to comply with new changes. I'll get into that shortly. There has been increase in the cost of increase in wildfires. There's been an increase in repairs, housing repairs. Did you know? Were you aware that there is increase in repairs? I want you to think about it. I want you to see what are these moving parts. So I quoted here the current price of lumber as of June 19th, 2023, today's the 21st, is $344 per 1,000 board feet. Now, if you look, you can Google this, the source is macrotrends.net, keyword lumber prices 50-year historical chart. If you just want to follow the cost of lumber in the last 50 years, how it's changed, how it's increased, and it fluctuates. It's funny because a client, a dear friend of mine, she said, what recession are people talking about? She said, because I feel everywhere I turn, people are building, there's new construction going up in LA. Absolutely. LA is a new South LA. We used to be South Central. We're no longer South Central. We're now South LA. Is how it's termed in our multiple MLS systems, multiple listing service. It's how it's marketed and targeted to, live in South LA where you're close to everything, like the SoFi Stadium, USC. We've got new developments. I mean, tremendous things. We've got the what's the guy? George Lucas Star Wars Museum, South LA. We've got, there's just so much that has been built in South LA and the adjacent areas. It's incredible when I look at people who are saying, "Oh, we're going through a crisis and recession," and I'm like, "Really? You see these high rises going up? You see how many people are doing 2 stories? They're tearing down the garage or reinforcing their garage and building a second unit on top of the garage. Right in your local neighborhoods, right in your backyard." So we're seeing that increased costs where people are building, right? These insurance companies have new rules that they have to comply with, and they're like, no. Cost of these houses, no. ADUs, no. Junior ADU, no. Insurance companies are like, y'all doing too much. And then there's a higher reinsurance premiums. The reinsurance premiums are the premiums charged by the company that is actually insuring and taking on the risk. And so it's just not making sense because they pass that cost over to whom? The homeowner. It just doesn't make sense. So these insurance companies, Allstate and State Farm, have said, nope, we're pulling out of California. We're not insuring new houses. They say they want to focus on their existing policy holders and want to continue to protect them and serve them. So that tells me not exposing them to more risk, especially as they're being forced to comply with increased payouts. They're supposed to offer more evacuation benefits to those who are affected by wildfires. They are to offer discounts for upgraded roofs. And in our industry, we have been inundated with new contracts that have wildfire disclosures, have disclosure surrounding square footage. In fact, I've got an escrow that I'm dealing with right now uh, that has that discrepancy on square footage by 400 square feet. That's a lot when you put, $90, $60 to $90 per square feet when it comes to valuation, when it comes to the price. Insurance companies are being faced with that. So here's what I want you to think about. Do you have an ADU? You have trash or debris? Are you looking at a property that has an ADU? Are you purchasing a property that has, trash, junk, debris? Because you run the risk of an insurance company denying your coverage. Are you fixing cars in your driveway? Did you know that properties that are not zoned for that, if you're in a residential area, you should not be doing that? Of course, we don't think about that, right? You're like, no, nobody's going to call. Our neighbors know, old Joe has been fixing cars in his driveway. That's what he does. He doesn't use a mechanic shop. And so that I bring that up because that was one of the issues with my client is having cars stored and, pretty much the repair shop ended up in her backyard during COVID. Now that those moratoriums conditions have ended, insurance companies are saying, okay, more people, more bodies, people are using their houses for commercial uses. We're not going to expose ourselves to this risk and we're going to cancel those policies and we're going to keep it pushing. So just to recap, insurance companies are forced to comply with new regulations by the California Insurance Commissioners. This is why these two companies, these huge companies that you may know, a lot of people that might be reps and insurance agents for both those companies are pulling out. Ask them how's business. Ask them how this is impacting them. How is this going to impact our future home buyers? I anticipate that qualifying for a new home can be challenging because with these two companies pulling out, and they're not the only companies, right? But when we're talking about insurance brokers and the reinsurer, so there's an insurance broker who sells a policy to the insurer, right? They're writing it through the actual insurer. Your insurance broker, call it David's Insurance, insurance brokerage. He's not the insurer. He's selling you the policy that he is shopping with different carriers to see who's going to cover it. And so this aspect of the industry is being impacted. And I anticipate we'll see more buyers affected with their ability to qualify for those home loans, especially when we're looking at the increasing cost of housing. Yes, the market has adjusted, by what 14 to 17%, but that means they still have about a 26 to 32% gain from COVID because it went up about 56% in value. So we have those market adjustments depending on your market area. The prices are still hot. We're in the summer. We just opened escrow on a property that had 37 offers. 37 offers. I just enjoy doing this business because you just see how, yes, I'm a conduit, but there's like a bigger force because my client beat out 37 offers and did not have to compete. How did that happen? It's called moving quickly, strategically, and writing those clean, firm, solid offers, right? It's also paying attention to the needs of the seller. Paying attention to the needs of the seller. What does the seller want? Evan's in the building. He says, the champ is here. The champ is here. So, what's going on my slide? Hold on. All right. So, welcome, champ. we're going to wrap this episode up. We're talking about some good stuff. If you are just tuning in or you are catching us on a radio podcast, make sure you hit #replay. Hit that #replay, lets us know you're on, and we'll join you in that conversation right in the chats. Of course, you can, if you have any questions regarding the topic of the show, buying, selling, leasing, need a real estate coach, consultant, advisor, someone to put a strategy plan into play for you. I make myself available. I had a client that reached out, was out of area. I have a couple people that reach out of area, and we put a plan together and we work that plan, execute that plan. You can reach out direct, email Lisa at LASuperagent.com. Again, that's Lisa at LASuperagent.com. Of course, you can reach me on my work phone. This is my work cell. Text me directly at 323-488-3265. Again, 323-488-3265. This topic is probably going to be one of the most important topics we have this year as we're watching the insurance industry in chaos, right? They're trying to recover. And I know people say, well, we've paid so much premiums and not everyone's made a claim. They have tons of money. But yeah, and they have the right to say, we don't want to play. And that's what these two companies have said. The Department of Insurance, the California Commissioner, has said, you've got to comply. We want to increase consumer transparency. We want to increase risk. We want to be transparent in risk ratings. And these insurance companies say, nope, not going to play in California. We're out of here. Good luck, California. And so you may start to see this trickle down effect where homeowners and property owners who've owned their property for a long time and you've been comfortable with how your house or how you've been maintaining your house, but you now run the risk if you are falling in within any of those things, you doing an ADU conversion, you don't have proper coverage, or you haven't notified the insurance company that you're doing it. You're fixing cars on your lot. You've got junk, trash, debris. You're recycling stuff. You know, you can't be a hoarder anymore. And I shouldn't say that because that's a medical term. You cannot continue to maintain the debris and the personal items in excess. They're coming out and they're coming for you. They're coming out and coming for you. So what happens is, don't lose your property because of these changes. Don't lose these properties because of these changes. Why? Because when the lender increases your insurance, because they put forced insurance, it bumps how much you can pay in your mortgage. And now your mortgage has gone up. You can't afford it. And now this creates a ripple effect. Now you are subject to foreclosure and losing the home that you've been in for the last, anywhere from 5 to 20 years or more. Go figure, right? This is a lot. All right. Make sure you let someone know what we're doing here on the show. Thank you very much for joining us. We'll see you next week on another information-packed episode on Ready, Set, Real Estate. Take care, guys. Stay hydrated.
Thank you for listening to the Ready, Set, Real Estate podcast with Lisa Gillette, the LA Super Agent. Please like, subscribe, and share LA Super